Hello, dear viewers, students, and my professional fellow. Assalamu alaikum. Welcome again with contemporary issue, that is current issues. We have two current issues to be implemented in near next December and January. This is also important for final level students and professional level students of CA ICAB. These current issues are: one is international standard on quality control management ISQM1, and another is IFRS 17. Dear viewers, ICAB can judge you in current issue that if you have knowledge or summarized knowledge or overview of any current issue, you can achieve good marks and pass also. So in this case, I will summarize the current issue. I will not go for details. This ISQM1 is vast for the external auditor especially, and IFRS 17 is one of the complex and detailed and vast IFRS after IFRS 9. So this is new issue. I will give concept and will learn the concept for the examination and practically. So international standard on quality management ISQM1 is effective from 15 December 2022. It will replace international standard on quality control ISQC1. There will be no ISQC1 after 15 December. So key points or key principle: the quality standards are focused on public interest, professional skepticism and judgment, estimation, and without any fear or bias. We will learn key difference of ISQM1 with ISQC1, that is old. ISQM1, that is new standard, is for the audit firm or external auditor to have quality and risk management team inside their audit firm. This is regulatory and this should be followed by the external auditor for their own quality and leadership. The 8 components are given by the ISQM1, that is firm's risk assessment process and ongoing and adaptive to change. This is ongoing. In ISQM1 this was absent. No risk assessment was available in firm level for CA firm or audit firm. Now risk assessment process also should be launched by the auditor. That's like business risks, finance risks, everything. And this is the part of ISQM1 new standard. Governance and leadership. Previously it was only leadership. Now governance, good governance or principles has been established for leading a quality audit firm. Relevant ethical requirement or standards. Relevant ethical requirements are also same. There is no change. That is integrity, objectivity, professional competence, and professional judgment and professional behavior. Also the fundamental principles are same. Acceptance and continuance of client relationship. This also same. This was previously there. Acceptance and continuance of client relationship. Engagement performance is also same. This was available in old ISQC1. Resources. Additional specialist, generally technological resource apart from HR. Previously it was only HR. Now apart from HR, technological resource should be included in ISQM1. In case of any quality audit or IT audit or blockchain or huge issue, auditors should have resource like technological resource besides human resource. 7. Information and communication. External communication such as to those charged with governance or regulator. Keeping confidentiality, external communication is there to address the matters to those charged with governance or regulator. Previously it was absent. There is no such component. Monitoring and remediation, internal and external for public interest. Previously ISQ1 had only monitoring. Now it is monitoring and remediation. Remediation means have to have solution, internal or external or public interest. Auditors are encouraged to do anything for public interest. This is the summarized matter of ISQM1. This is the component should be known by the students who are appearing next month or after January. This is important standard to be known or learned by the students, also for professional accountants or external auditor. Next we will go for IFRS 17. This is big standard. I was also to say there's basic difference with this was previously IFRS 4. IFRS 4 will be replaced by the IFRS 17 from January 2023. We will know the basic difference. IFRS 4, revenue recognition of the start of the contract. So IFRS 17, there is no revenue recognition. Upfront revenue is not permitted. We will go for math. For example, in Excel sheet, you will see the upfront revenue is not permitted. Principle for the recognition, measurement, presentation and disclosure of insurance contract. Entities were free to derive for their own interpretation of the revenue recognition. There is no such standard, rigid standard for the entity were free to have own recognition of revenue. But IFRS 17 makes obligation that principle for recognition, measurement and presentation, disclosure of insurance contract. There is no chance of misinterpretation. Insurance is calculated separately. Previously it was calculated on net basis, but from IFRS 17 it is calculated separately. Change in the value of market variables may go through PL or OCI. There is timing revenue or discount factor, time value of money will be used, and also this difference of market variable will go through PL or OCI. Previously it was market variable go through only PL. Consistent accounting for all insurance contract of all companies. Variety of treatment depending type of contract and entity interpretation. Previously it was variety of treatment depending on type of contract. Now it is consistent accounting. Previously lack of discounting measurement for some contracts. Now measurement insurance contract reflects time value of money. This is significant. Salient features of IFRS 17. It is effective from January 1, 2023. Earlier adoption is permitted. IFRS 17 gives consistent framework for all insurance contracts were absent in IFRS 4. Group of contracts with similar characteristics is aggregated together rather than individual basis. Comparability among insurance contract to multinational company will measure insurance contracts consistently within the group. IFRS 17 have feature of integrating multinational companies group contract. IFRS 4 measures contract using historical cost, but IFRS 17 provides us contract in current value. IFRS 4 does not consider time value of money, but IFRS 17 based only obligation created. IFRS 17 provides consistent current and future profits from insurance contract. That I have also said. And change. There is change measure, updated estimates, timing of cash flow, any uncertainty, onerous contract, unfavorable change in which value of fulfillment cash flow is negative, liability, that is charged to PL. If there is onerous contract, the liability will be charged to PL. Transition, if there is any transition difference from IFRS 4, transition is retrospective. IFRS 17 gives us permission to have retrospective effect for any transitional effect. Contractual service margin CSM is amortized. There is a system of amortization of contractual service margin. IFRS 17 gives us three model for measurement of insurance contract liability. Three model for measurement into insurance contract liability are: one is general method or building block approach, BBA. This is mandatory. Second one is premium allocation approach, PAA. This is optional. And third one is variable fee approach. This is mandatory. Then we'll go for Excel sheet for example. ABC Insurance Company issued contract for 50,000, issued a contract 50,000 for 12 months and record premium upfront. The acquisition cost is 2,000 paid on July 1, 2021. Acquisition cost is incurred during the year. Accounting years 2021-22. Show the journal entries and treatment in financial position at 30 June 2022 after each quarter report. Will give quarterly adjustment. First of all, whenever we receive any payment for insurance contract, it should be treated not revenue. This should be treated as liability. Insurance contract liability, debit for 50,000 and cash account debit. Insurance contract liability is credit. This is the most crucial point of IFRS 17. Insurance contract liability, then if the acquisition cost is incurred, insurance contract liability is debit, not PL or any other OCI. This should be reminded and should be remembered by the candidates and professionals. Insurance contract liability is debit and cash account is credit. Amortization, this is already said. I have said that this each quarter report. So there is 4 quarter. So amortization is for 4 quarter is 2,000 divided 4 is 500 each. So financial position. Students and dear viewers, see the financial position that is liability. It is liability side. Contract liability, insurance contract liability, that is opening liability, that is no figure. 30 September, 30 December, 30 March and 30 June, that is our closing 2022. If we have received 50,000, this is the contract liability, this is minus figure, that is liability. And the acquisition cost is debited there. This is opposite figure, that's plus figure against minus figure, and there is no acquisition amortization, and closing liability will be 48,000. This is opening for next quarter, and revenue will be for each quarter is 12,500 each, and this is end of the fourth quarter is all the same figure. Then acquisition cost is amortized, insurance service expenses debit, insurance contract liability is credit. Be careful, amortization is not charged directly in PL. Insurance contract liability is debited, insurance service expenses debit, insurance contract liability is credit. This is the amortization figure. So this is the closing, opening 48,000 and their revenue and amortization after. This is the net figure is 36,000, and also 36,000 is opening of December and is closing 24, and there is another opening for March 31st, and then closing is 12,000, and at the end of the fourth quarter there is no liability. That's all gone to the profit or loss account. This is statement of profit or loss account. Insurance service result, this is the language of IFRS 17. Insurance revenue and insurance service expense. Insurance revenue is 5,000 and amortization is charged 500, and profit or loss is given 12,000 each period. So this is the way of exhibition your transaction according to IFRS 17. That's the completion of my short video regarding IFRS 17 and ISQM1. Both are current issue and contemporary issue. This is important for all students and professional. That is upgraded knowledge the ICAB wants or examiner wants. This should be carefully written and addressed or learned by you, please dear our students. Till my new video and contents, if there are any suggestion or recommendation, please don't hesitate to knock me in your comment box. Till next video, Assalamu alaikum.